Hello and welcome to the video, guys. My name is Brandon, and in today's video we're going to be looking at 3 stocks to buy going into April of 2018. And guys, I'm going to keep this video relatively short because 2 out of the 3 stocks that we're going to be looking at today fall under the consumer staples category. And if we were to bring up on the screen here the performance of this sector, guys, it has been absolutely slammed this year. Some people may blame, the rising interest rates, which of course makes fixed income more attractive. Some will blame Amazon, but whatever the case may be, the index as a whole is down about 14% year to date, and I just can't help but think that this is a great form of value. And I think this is super important, especially where we stand in today's environment. You got a lot of investors, a lot of people saying things like, we're entering bear market territory, or, the market's overvalued, there's a stock market crash coming soon. And whether that's the case or not, it's always important to hold quality stocks like the ones that we'll be talking about today, and not just chase the stocks that are performing well, like, the Netflixes and the Microns and Nvidias. You got to have a balance of both. So let's get right into the video, and the first stock that we're going to be talking about today is PepsiCo, ticker PEP. And both Coke and Pepsi, in my opinion, deserve a spot in any investor's portfolio. They've both established themselves as leaders in the beverage space. They're both, 2 very loved companies with a strong lineup of brands. But really, guys, one of the main things that makes Pepsi so attractive to me is the fact that they've delved into the snack foods category. And this is really what sets them aside from Coke. Coke has an outstanding lineup of brands, from their Coke products to Minute Maid, Dasani water and whatnot, but as of right now, they are strictly a beverage play. And for those of you guys who don't know, PepsiCo is the proud owner of 22 well-loved global brands, which includes both beverages and foods. They actually own about 60% of the market share in the potato chip industry with Lay's, Doritos, Ruffles. And having that extra layer of diversification in terms of products is really key to me. We look at their numbers here, and for the most part, guys, the company isn't growing at a crazy rate. In fact, they're more or less just treading water in terms of their top line. Margins are stable and very consistent, right around that 50 mark, and this would absolutely be considered a safe play. With a stock like PepsiCo, you're pulling in a 3.8% dividend, and in my opinion, it's a stock that should hold up fairly well through a recession, through tough times. But man, we look at the share price here, guys. The stock is down 18% year to date, and I think that's a little overkill, and I do think that I would consider this stock undervalued at the moment. So Pepsi is the first stock to buy in April. Moving on to the second stock for this video, and I actually touched on this stock in my one of my recent videos, 3 safe stocks to buy. It's the company Procter Gamble, right? Ticker PG. 13. And very much like PepsiCo, the stock has absolutely been drawn down, along with the entire consumer staples sector. It's down about 20% year to date, and that is huge considering that Procter Gamble is often referred to as a safe play. And the reality is, you can get so caught up in the stock price, oh, what's going on with this company, blah, blah, blah. But at the end of the day, in my opinion, what's happening, guys, is just this sector, the consumer staples sector, seems to be out of favor. And although the company is just performing pretty steadily, money is just flowing out of this sector. But if we focus into the stock, we look at the underlying company here, year round, Procter Gamble is selling products to consumers. Tide, Gillette, Bounty, all these household consumer goods. This is a company that generates very consistent revenue. Last year, they pulled in $15 billion in net income alone. The company's currently yielding 3.8%. Morningstar has them rated at a 5-star rating, so very much undervalued. They have a fair value estimate, or like a price target, at $98. I just think that this stock, like I said, along with a bunch of other stocks in the consumer staples sector, is oversold. And if you don't already own Procter & Gamble in your portfolio, it's one of the greatest dividend paying stocks out there. At these current levels, I'm just seeing a lot of value, and I think it'd be a great time to add it to your portfolio. Moving on to the third and final stock for this video, we're going to shift over to the healthcare sector. It's the company Pfizer, ticker PFE. And personally, I always used to know Pfizer as the company that created Viagra, right? The little blue pill. That's kind of how I always thought about them. But last year in 2017, they actually lost their patent for Viagra. So that's just a little fun fact for you guys to know. But for anybody that's not familiar with the company, Pfizer is a pharmaceutical conglomerate involved with developing, manufacturing various medicines and vaccines. As well, they have a variety of healthcare products that they sell, all over the world. And I'm not even going to attempt to say some of the names of the drugs that they own, but they do have a very wide lineup of drugs, and they're one of the most highly respected players in the pharmaceutical space. And the reason that I think Pfizer is a great company to own is the fact that they have a fairly wide moat. The healthcare space is one of the most difficult spaces for new companies to come in and thrive in. Pfizer has a strong competitive edge when it comes to developing new drugs. They say on average that it costs around $800 million in development costs to get a new drug out there. So the capital that these companies must have in order to research and develop, hit drug after hit drug after hit drug is insane. And that's where being one of the big players in this space, where you have the deep pockets and you have the resources available, becomes a huge advantage. And that's not just for Pfizer, that's for Merck and all the other big players as well. But the stock pays a 3.8% dividend, which is well above the industry average. Over the years, they've developed such a strong distribution network. And like I said, man, due to their sheer size and the resources that these big companies have available, and it's super difficult for new companies to get in this space, I think that they'll continue to develop hit drugs, and I think that Pfizer is a great stock to own. So guys, those are my 3 stocks for the video. I kept this video shorter today, just mix it up, let me know what you guys think, whether you like the long videos, the short videos, I don't know, just experimenting. And as always, be sure to do your own research, throw these stocks on your watch list, kind of monitor them over the next little while, see how things go. But I do think that all 3 of these stocks are great stocks to own for the long term. And if you guys enjoyed the video, feel free to give it a like. And if you're not already subscribed, subscribe to my YouTube channel. I post a video every Monday, and hit the bell so you get notified. And as always, I thank you guys for watching, and I'll see you in the next video.